Philippine stock market plummets 24% after trading halt. I wanted to note this because of what had happened just recently. They had to close the market down because everybody was selling. It was a wild ride on the way down. They stopped it from happening. All right, just close the markets. Don't worry about it. Everything's going to be fine. They reopen. It continues. It gets worse. That's why you don't close the markets, because you actually make it worse. All that pent up energy doesn't go up. It goes down. This article here is just talking about the 50-year treasury that they want to create. They most likely will. And why? Why do you think they're doing this? Well, of course, they are about to implement a $1.3 trillion stimulus package, or at least they want to. How are they going to fund it when the debt is already so extreme? The deficits are getting worse. Everything is a mess. Well, you issue more debt. Worst case scenario, the Fed buys it. They're going to buy everything else. Might as well buy this too. U.S. consumers are facing what could become the biggest credit crunch since the 30s. Lenders and credit reporting firms aren't sure what to do about it. As the situation gets worse, thousands of waitstaff, bartenders, and airline employees are out of work and could be on the brink of missing payments on mortgages, credit cards, and other loans. This is so key to understand. Talk about the cascade effect. You might say, well, you know what? That company there, who cares about them? Let them go bankrupt. But people need to understand how it all works. Lenders have yet to report a spike in missed payments, but the impact could be considerable. If borrowers start defaulting, they could lose their homes and cars. In the longer term, those delinquencies could get factored into their credit reports, hurting their ability to borrow for many years. If somebody loses their job, they can't pay their bills, they're starting to go bankrupt, those problems end up on the company's books. And this, of course, when it's a small number, not a big deal. But as that number grows, we have big issues because of derivatives. Derivatives are the reason why this is an issue. Northman Trader had this to say, I think all the excess and reckless monetary policies of the last 11 years are directly responsible for the severity of this crash. This is exactly what I've talked about. If it hadn't have come up so high in such a short period of time, really, especially in the last year, let's say, it never would have ended this way. Sure, we might have still had a crash, but it wouldn't be so significant. There wouldn't be this freaking out that everybody's doing along the markets. We have huge disruptions going on, bonds and stocks and everything. It's truly unbelievable. As I just reported on CNBC, lawmakers are wary of bailing out Boeing, comparing it to AIG, a company that required government rescue only because of its own risky decisions. Based on current thinking, the White House would have to make an extremely compelling case to change minds. We'll see how this one plays out. I do think that they will get a bailout, but we'll see if the US takes a stake in it. Ray Cash is Trash Dalio estimates that corporate losses in the US will top $4 trillion. Extreme level here. We'll see if that actually does happen. It's very possible. Globally, the outbreak will cost corporations $12 trillion. What's happening has not happened in our lifetime before. What we have is a crisis. There will also be individuals who have very big losses. He wasn't expecting this just a couple months ago, and most investors, quite frankly, never saw this coming. Global debt hits new record of $253 trillion and is set to grow even more this year. Imagine with all of these different plans that they have put into place, where as the stock markets are falling, they're introducing fiscal stimulus, monetary stimulus, and this is only going to compound the problem of debt. They think that because they have low interest rates, that makes it easier to pay. But clearly, they do not understand derivatives. They don't understand derivatives. They don't understand derivatives. And a little bit of humor. Senator dumped up to $1.7 million of stock after reassuring the public about being prepared. Isn't that interesting? We see the insider trading happening all the time, and this is no different. On one hand, they say one thing, and then the other hand, they do something very different. This is just one example. There have been many, many throughout history. This is just the most recent example. That's all for this video. If you found it informative, hit that thumbs up button. When you give it a like, you support me. Thank you very much. I am creating original content on Instagram and Twitter every single day. Please check me out on there and all other platforms at The Money GPS. If you want to learn how to sell online, this is the right time. You can check it out for free at theamazongps.com. If you want to learn about the foundation, the history, the asset classes, the financial education that you never received, these two books have everything that you need. Check them out at the link in the description if you want the audiobook, themoneygps.com. If you want to learn the how-to and solutions, I've got a playlist called How-to and Solutions. Check it out. Click on it and I will see you there.